It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And I'll be a son of a gun. Joining me today is the man himself, Mr. Michael Becker.
Hey, Paul.
Better known as the governor of Beckerville. He's promoted himself from...
I think you promoted me.
I guess maybe I have...
Unelected title here.
Unelected, yes. We've had an election here in the state of Texas, and I didn't see your name on the ballot.
Nor will you.
So Michael, who, as you know, has been a loaner of money for a long period of time. He transitioned a number of years ago from owning, 14, 15 single-family homes to having how many apartment units?
Yeah, we closed this year out. We would have purchased about 6,700 apartment units, and the portfolio will be close to 4,500, give or take, when the year's out.
That is incredible. So 6,700. Now, how many buildings have you
sold? We'll purchased, about to close on our 33rd acquisition, and we've sold 13. So we'll have 20 left in the portfolio when 2018 is over.
Amazing.
A lot of work.
Good for you. So we wish Michael and his team at SPI a lot of success. They've done a great job, and so let's continue to go. But talking about continuing to go, Michael, here's a question. Michael, is the crash coming, and am I going to lose all my money?
We'll probably have a two-part podcast on this because I've read a couple articles. So I want to really touch on one article. So Paul and I actually were at a conference in Miami about a month or so ago at this point, and heard the head of Freddie Mac, David Brinkman, give a presentation. And then I saw a few days after that, he actually wrote an article basically with this whole presentation we saw in Miami. So we'll try to put a link to this article in the show notes here, so go to the show notes and look for it. But basically, the way the article was titled was "Struggling with Housing Costs, Renters Continue to Find Affordability in Renting." So basically what his whole point was, I took about 3 or 4 things away from this article, was Freddie Mac did a survey that right now 78% of renters believe it's more affordable to rent versus owning a home. And what's really kind of interesting to me was that that's up 11% from February of 2018. So in 6 or 7 months, this article was written in October. So in 6 months from February 2018, 11% more of the renters believe it's more affordable to rent versus owning. And so why is that? You know, that housing prices have certainly moved up quite a bit in the last, 7-8 years. That's partly due to lack of new supply. So certainly they're not building nearly enough homes to kind of keep up with the growing demographics and all the household formation that has certainly come as the millennials kind of age into their early 30s. They're forming households, having kids, things like that. So there's not as much supply to keep it. Then on top of that, you have, rising construction material costs, land costs are up quite a bit. And then most recently, really since February, it's been struggling a little bit for what Paul does and what I do. His interest rates were up, so it's been causing a little bit of problems and kind of compressing some of the yields on the multifamily, but that's also directly impacting the affordability of housing because it's so sensitive to interest rates. So, every quarter point that goes up is, that much more expensive in your mortgage payment every month. So it's making the relative affordability compared to renting more attractive to rent, at least that's the perception. The other thing I thought was kind of interesting in this article we'll kind of reference was that 66% of the renters have trouble affording their rents on a monthly basis, so that everyone's kind of stretched pretty thin. So we've kind of felt that these rents have gone up quite a bit over the last 7 or 8 years, and the incomes really haven't kept up with it. And so, there kind of might be that point where tenants kind of push back a little bit on affording the rents. But the counter side of that is the housing, their alternative of owning a home is not attainable to them. So they really don't have a whole lot of choices. They got to keep, paying more and more. And then where we're located in Texas, our rents are so much more affordable relative to the two coasts in California that people kind of tend to migrate this way and, follow jobs, and they can just, have to pay a little bit more. So, then finally, one of the other things I've seen is kind of there's the percentage of people that are satisfied being renters is kind of like a lifestyle choice is up quite a bit as well versus where it was, 10 or 12 years ago when kind of owning a home was the American dream. So all that to be said, it feels like when rates are going up, and it's squeezing our yields a little bit as apartment owners, apartment investors. At the same time, it's actually going to kind of put a little bit of a floor and put upward pressure on rents because the alternative is really either to, buy a house or be homeless. So being homeless isn't a good option. So if you don't rent and you can't afford a home and you don't want to be homeless, you have to rent. And it should put upward pressure on rents, and people, it's being a necessity. People tend to find a way to make this thing kind of work.
So just a general observation, if you went back, Michael, 10, 15 years ago, before, say, the Great Recession, and I would think Dallas is one of the most affordable markets in the country. Just the way
Certainly was then.
It was then. If you remember, first-time home buyers were able to buy properties between, say, $98,000 up to maybe $145,000, and there was just maybe just a glut the first-time home buyers, and there was just a way oversupply of inventory and housing and all kinds of stuff at that period of time. And I think I remember seeing David Brickman's chart really talking about we are an undersupply right now. May not feel it in the multifamily business where these brand new A-class apartment buildings are coming out of the ground, but we are definitely in an undersupply in the class C and B affordable housing, workforce housing. So, people have to live someplace, whether it's an apartment or it's in a house. But imagine going from like 10 years ago at $145,000 today. It's a couple $100,000 here.
At least.
Yeah, here in the Dallas-Fort Worth area. So it's gone from an affordable area to it's got being pretty damn expensive.
Yeah, so I think the point is that he was illustrating in the graph when we heard him speak. What I recall was that, while we're building a lot of multifamily supply, it's within the top end of the market. We've talked about that many times. I have many guests on here talk about all the supplies delivering is clustered in the urban core and top flight suburbs, and it's expensive. They're not building affordable housing. If anything, affordable housing is getting displaced, scraped down, and they build something nicer, newer, and bigger on top of what used to be affordable housing. So it's becoming a real crisis out there, in that it's really hard to build new affordable housing without massive government subsidies, and because land prices up, construction's up, interest is up, labor's up, so everything's just more and more expensive. You can't make these deals pencil if you have $1.20 rents. You gotta pencil these things out at $2 or $3 rents to make these things make sense. So I think, it's going to put a floor within there. So obviously there's cycles and they go up and down, and every market's different. So we do a lot of business in Texas. I only own in Texas. That's kind of what colors my glasses, I guess. And if we owned in Seattle or in Los Angeles or San Francisco, it might be a completely different story than what we see here in Texas. But, I don't see the floor dropping out on rents anytime soon, as long as rents kind of stay stable and there's enough demand and occupancy in kind of that B-class workforce housing space. I think, people that buy today that are prudent about where they buy and structure the deals right, as long as you hold on your property long enough, rents are going to go up.
I think renters make decisions to rent for really two choices. I think Michael hit upon that. One is just a choice. It's a lifestyle thing where it is, lock the door and leave because the kids have grown up, the house has gotten too big, they don't want to do yard work, and they want to move on. And then the other part, which is the one that probably we do a lot of business with, is that they're kind of forced to rent because they live on a cash flow basis. They would be challenged to buy a $300,000 new home and do a FHA 3.5% money to try to do that, and then pay for closing costs. And they're forced.
Yeah, I read another article. There's something like 45 to 50% of Americans couldn't come up with $400 if they had to, which is like staggering to me to see that stat.
So just like anything in life is that if economy slows down, people who live in the A properties would go to the Bs would possibly go to the Cs, and the Cs would just kind of maybe double up and have maybe another family member stay with them just to be able to make the rents. I don't see the rents falling out or having a problem. These folks that are living in workforce housing, they live on cash flow. I mean, that's really the difference that I see between, say, leasing a car and owning a car. If your choice is really to own a car, but if your choice is only because of cash flow, you have to lease a car because you want the best high quality and you don't want to pay the rest of the expenses. Leasing is kind of the same way. So if a person feels rich, they're going to live in a Class B property, a Class A property. They kind of feel poor, they'll work their way down from a B to maybe to a C property. But I just don't see it. I don't see the market kind of falling apart, especially with throughout the United States. There are going to be different areas of the country that are going to kind of ebb and flow, but in the Southwest, in the South, where a lot of the jobs are continue to come, I think we're pretty solid and stable. So, good question.
Yep.
And that's good. Michael, if someone wanted to get more information about learning a little bit more about SPI and what you guys do, What's the best way of doing that?
Yeah, really the best way is just simply go to our company's website, which is www.spiadvisory.com. That's SPI like spy, advisory.com. And on there's a contact us form. Fill that out. I'm always happy to have a 10 or 15-minute telephone call with listeners of the podcast who want to learn a little bit more about what we do and potentially working with us.
Sounds great. That's some great information. Don't forget to contact Michael Becker. So I'm Paul Peebles. That was Michael Becker. Have a great day.